The Access Bank Group, one of the Sub-Saharan Africa's emerging financial institutions, took a significant step in its quest to evolve into a holding company structure as it held its court-ordered meeting at its towers, Oniru, Victoria Island, Lagos. It had in attendance some of the board members, representatives of shareholder groups, representatives of regulatory agencies in the financial and capital market, other partners and associates. The chairman of Access Bank, Dr. Mrs. Awosika, in a remark stated the reasons for the proposed scheme.
In September 2010, the CBN issued the Regulation on the Scope of Banking Activities and Ancillary Matters, number 3/2010, with effect from November the 15th, 2010, the Regulation 3, which repealed the Universal Banking Guidelines. This was done to promote a sound financial system in Nigeria by limiting the exposure of banks to higher operating risk and reducing the propensity to put depositors' funds to risky non-banking businesses. Regulation 3 stipulates the type of banks permitted to carry on business in Nigeria as A, commercial banks, B, merchant banks, and C, specialized banks, which include non-interest banks, microfinance banks, development banks, and mortgage banks. The board is of the view that adopting the holding company, HoldCo, the HoldCo structure will be advantageous to the bank. It will facilitate the business growth of the banking group and expansion of services into under-penetrated regions in Nigeria, Africa, and beyond, and will enable Access Bank to diversify its business portfolios into new areas. The HoldCo structure into new areas within the financial service industry that are permissible by the CBN HoldCo regulation. The HoldCo structure will ring-fence each business from the risk of the other by preventing the business performance of one business from affecting the performance and valuation of another. Accordingly, under the HoldCo structure, the assets of the bank are ring-fenced from the non-banking businesses. Benefits of the scheme. The following are expected to be the benefits of the scheme. 1. Facilitation of growth and expansion in banking across Africa. 2. Better positioning to deal with emerging competition, for example, fintechs and payment service banks, and diversification into permissible financial services. 3. More focused regulatory oversight of the various arms of the group. 4. Ring-fencing each business from the risk of the other by preventing the business performance of one business from affecting the performance and valuation of another. 5. Facilitating a consolidated financial strength of the group, which will improve access and ability to raise capital with benefits including lower transaction costs, amongst others. 6. Expediting capital and liquidity and providing flexibility to accommodate leverage with minimal risk to regulatory ratios. And the 7th benefit, unburdening the bank from oversight functions and responsibilities of managing the subsidiaries and ensure the bank is solely focused on its core operations.
Some of the shareholders in the reaction gave their views on the holding company direction of the banking group and key issues to be considered.
Let me say that my major area of interest, realizing that what we're doing is basically moving money from the right pocket to the left pocket. The money still remains within the same body, so nothing is lost really as far as shares is concerned. But I'll be interested as to what structure are we looking at post this event and post approval. Because looking at page 14, what I find is that we're going to run the banking and the non-banking, and that's why we're coming for HoldCo.
I would like to take you to page 40. You see, I'm somebody who is very much interested in ensuring that those who work well for the company are duly compensated and, of course, are adequately taken care of. And on that page 40, it talks about the basis of preparations for compensations of directors and employees. As I said, I'm not against that. And when you look at the next paragraph, it says this is projected to grow at the rate 10% biannually. The chairperson, are we also expected as stakeholders and shareholders to have our returns also grow by 10% biannually, so that the two will balance together?
In response to their reaction, the Group Managing Director, Access Bank, Mr. Herbert Wigwe, provided further insights on the transition to a HoldCo structure and what the investing public should expect.
HoldCo will lead to increased expenditure, you're right. And we will have a separate board for HoldCo, obviously. We will follow best practice and very, very, very stringent governance standards to avoid conflicts. But you know, the reality is that the way the central bank regulates even non-operating HoldCos is extremely heavy. All right. And yes, they regulate the bank, but they make very significant demands on the holding company. But let me put it this way. When you are growing from a 1 country presence to a 10 country presence, and maybe a 20 country presence, there's something referred to as the College of Supervisors. All right. Now, if you were running Nigeria and Nigeria is growing and growing and growing, and one day they tell you that you have 20 countries, inclusive of the UK, where the regulators want to speak to you, the burden of having that meeting in itself requires several months of preparation. So what all of these things try to do, and what we're doing, is to make sure that even at HoldCo level, in spite of the increased regulatory pressure from central bank, we do have a holding company board that can basically interface with several of those regulators to make sure that our institution, as it's growing, is well protected. After all, we're not yet the size of Citibank. And I'm not talking about Citibank here. This one is small. Our equivalent is the one in New York, you know. So it is the same type of structure and construct that you see that is adopted even in those climes. So we're trying to bring all of those practices as we evolve over time. Maybe under a different leadership, we'll be present in 60 countries across the world. So the structure has to continue evolving, all right, to get to the point where you will be able to still control this vehicle and control it properly, following best practice, the highest governance standards in terms of risk management, and all to ensure that shareholder value is optimized. Patrick, you spoke to the issue of compensation for staff and directors biennially, and the fact that it should also be extended by definition to shareholders. Now, in the value-added statements, there's a portion which has to do with, you know, payments for staff and wages, etc., etc. And you know, if you don't get people incentivized by making sure you're paying them the right salaries, you will never get the appropriate numbers. But I think the returns we are beginning to see are a reflection of the fact that the institution is getting better and better and better. Now, how does this evolve to shareholders? It evolves in two ways. One, in terms of your dividends, and second, in terms of your capital gains. And I think if you do both of them, you'll see that the institution is getting better. But my view to shareholders, as most of you are, is for us to always take a long-term view of where we're headed. When we did this thing in 2002, we were one of the smallest banks in this country. Today, from the shareholders, in terms of total assets, total customer base, we're the largest bank in the country. And so we need to retain funds to support our growth. Now we are evolving into Basel III. It's coming with its own demands on all of us. All right. So I think that we don't just see shareholders as residual. No, we know that they ought to be compensated. But I'll appeal to you, like several of us as well who are here, that please let us also take a long-term view of where we're headed. Sometimes the markets do not fully reward people for the risk that they take.
Highlight of the event was the overwhelming 100% votes by the 880 shareholders who hold significant stake in the financial institution to proceed with the proposed restructuring as a holding PLC by April 2022. Mr. Herbert Wigwe speaks on the wave of the Omicron variant of the COVID-19 and how Access Bank is preparing to navigate the challenges it may pose. He also speaks on the opportunities for millennials in the HoldCo structure.
I think if you recall at the beginning of COVID, we came out and shared with the marketplace some of the measures we're taking to basically ensure that we protect our people, we protect our customers, and we enhance shareholder value. I don't think it has changed yet. Our BCP picked the Omicron variant before it came out. And of course, we've basically started putting in place tools to ensure that we have very less in terms of incidents of people who basically pick up the variants. But apart from that, if you see how the entire meeting has been conducted, it's been done in a manner that is COVID compliant. Our people have ways they take tests as often as possible. People are working from out of the office again. All right. People are socially distanced. All right, to make sure that the overall incidence and transmission rate of all of this is minimized. But by and large, I think largely, if you ask me, to a very large extent, in terms of the impact on our people who are all double vaccinated, by the way, all right, it's not as significant as when it first started. Because it's a holding company structure now, and the HoldCo owns the bank, it owns the payments business, it owns other types of lending businesses. So you'll find most young people also coming to invest, at least to benefit from it. And apart from that, it's a more diversified portfolio, if you like. So I think there will be a lot of education and communication, and you'll find a lot of young people actually participating in owning Access Bank equity.
The chairman, Dr. Mrs. Awosika, also speaks on how the HoldCo structure will enable the drive to expand the services of Access Bank across Africa.
The good thing is that the key indicators will be that all the other organizations that will come under the HoldCo will add value. So at the end of the day, the shareholder wants value for their shares. So same thing. What has changed is that there's a better management structure that enhances the existing stake.
Mr. Patrick Ajudua and Dr. Farouk Umar, shareholders, also addressed the opportunities that the HoldCo company structure will bring to the financial institution.
To us as shareholders, we're very glad that they are moving into a HoldCo. That's like consolidation, and as well as bringing more value to shareholders. It will create room for more expansion and consolidation in their business. So for us, it's going to bring an enhanced value to us, and so we'd like to be associated with such a development.
Well, as a shareholder, I believe the company is going to be more profitable because the risk management is going to be mitigated properly, and they will diversify into businesses that are permissible by CBN, which we cannot do as at now. And also you'll find that with a HoldCo company, decisions are faster than when you have when you are not HoldCo. So these three things will help the HoldCo company.
10 years after the Central Bank of Nigeria repealed the provisions of the universal banking, allowing banks to explore the HoldCo structure, Access Bank is ready to evolve into this new ecosystem as a holding PLC. The management believes it is a new dawn that facilitates its expansion, productivity, and diversification of portfolio to create more value for the shareholders and the global economy.